In this presentation, we will continue on to part 7 of our C Corporation comprehensive problem, this time entering the income statement into our tax return into Form 1120. Here we are in our Form 1120. You'll recall last time that we entered our information into basically the balance sheet, which is on the Schedule L's. We entered that information. We left off not quite in balance because we couldn't do the retained earnings because we don't have the income statement in there and we want the system to calculate it. So we first need to put the income statement in so it can calculate the retained earnings. That's what we're going to do now. We're going to be doing that by going back up to the first page. So we're on the first page. Now, this will typically be done at the end of the day. It'll be in there on a tax basis. Right now, however, I want to enter it basically on a book basis because that's going to make it easier for us to do this in a step-by-step process. I'm going to get to the book income at the end. I'm going to basically remove the M1s down here, and that will mean that we'll have something in balance. If we have something in balance, we feel good, we have something that we can work with, we have something to fall back on if there's a problem in the future. So we're going to be entering this data. We're going to go back to our information down here. You'll recall, of course, that the income statement is going to be below the blue line, below equity section. We're going to be starting with sales, then revenue first income statement account in our practice problem. Back over where we're going to input, we're going to go to the data input. We're going to go to the income information and the income section. We're going to be up top in the gross receipts and sales. That's going to be for the 4120. So we're going to say 41200000. And then I'm going to go back over. We're going to make that one green because that's what we do when we've completed a task. And then we've got the returns and allowances at the 30,000. Going to go back over returns and allowances. Once again, we got to assume, got to say, did they want a negative number here or a positive number? It's going to be a contra account. If I put that amount in there, does it do the right thing that we would expect? It's going to subtract them out. So that looks good. Did the right thing. So that's good. Got that one. That one is done. Then we have the cost of goods sold. So let's go find that cost of goods sold. That's going to be, of course, an expense type of account. So we're going to go back over. We're going to be looking for the expense type of account of the cost of goods sold. Now, we're not going to be calculating the full cost of goods sold right now because we need to later at some point. But right now, I'm concentrating on getting the net income to be right. And I don't want to be deviating with other kind of calculations to basically, do that. So anything else that kind of gets in my way, I'm going to jot down. And so note now that if this was a rollover from the prior year tax return, you may have a beginning balance in there already. In other words, the beginning balance might be the ending balance from the prior year that's already in the system here. And that would be then here, the beginning balance was the 1440000. So you might have here, just to show you, 1440000 already in the system. But really, I just want to push forward with whatever's on the income statement, which happens to be here. The 900,000. So I'm going to put the 900,000 in purchases, and I'm going to put the ending balance at the same as the beginning balance. So I'm just going to go down to the ending balance, and that was the 1440. And that'll make it so it'll always calculate to basically be this will be your cost of goods sold. And then I'm going to jot down in my notes here, I'm going to say calculate detail for cost of goods sold. And then I might check the spelling if I am really, but this is just my notes. I'm not giving this to anybody unless I clean them up here. So typically it's just for you and I to be looking at the notes so you can misspell them if you want. And then we're going to go back over to our tax return and we'll go to the forms and see if it does, if what we think. So there's the 900,000. That looks good. And then I'm going to go back over here and say we have figured that we've done that one. Now we have these other kind of revenue accounts. Now all of these I'm kind of suspicious about, like gains. That's probably like a sale of stocks maybe. I got to figure out what the sale is. So I'm like, there's other stuff. I might need a Schedule D for that. And a gain on the disposal of assets. Well, that's going to be terrible because I'm going to have to figure out the depreciation schedule. And there's a difference between the book depreciation, the tax depreciation, and the accumulated depreciation. So that's really going to hold me up. I don't really want to think about that right now. I'd like to just get to the net income right now. And then I got the dividend income, which could possibly have some other kind of reporting necessity for it as well as the interest income. So all of these are things that I'm like, there could be problems with like all of these. What I'm going to do right now is I'm going to put them into the other income as is. And then I'm not going to deviate. I want to get to be in balance. I'm going to put these into basically other income right now. And then I'm going to deal with them one thing at a time, all in their turn. So I'm going to go back over and I'm going to go say, I'm just going to put these into the income right now because I want to get in balance here. So I'm going to go to the income and I'm going to go down to the other, and I'm just going to say this is going to be the capital gain. So I'm going to say capital gain. And then when I fix these, I'll actually show the M1s that will be related to them. I'm going to put the 7,000 here now. I expect to have to remove that. When I do, I'll put an M1 in a negative 7,000 so I can actually see the journal entry of me removing it from my temporary position here to the final position. And then I'll say gain on disposal, and that's going to be 25. And then we've got the dividend income, dividends, and that's going to be the 11,000. And then we have the interest income, and that's going to be the 16,000. Okay, and then on all of these, I'm going to put these into my notes. I'm going to say, all right, in my notes, we had the capital gain. We need detail on cost or basis and sales price. So I need to do that. And then over here we have the gain on disposal of so sale of, we can put the gain on sale of fixed asset. Need detail of cost or basis and sales price. So we'll do that later. It's going to be good times. And then we've got dividend income, need detail, and then interest income, need detail. All right, so I'm just going to jot that down and then push forward. We'll look back at those later. We got them, made them yellow, and we put our notes, so that's something we're going to check out in the future. So then I'm going to go back over and we'll make them green. I'm going to say they're green for now. So we've done those because they were already red. Need to make them red again. So I'm going to say this is going to be green. Okay. Then we have our wages. So I'm going to go back over and say wages. This one I like to jump from the tax return. So compensation. Notice I have officer compensation and salaries and wages. And I don't see anything broken out for officers here. So they might have grouped them all together in wages. Like the officer's wages is probably grouped in there. So I'm going to, I got to break that number out now. But I don't want to get into it like right now. I'm going to get into it. So I'm just going to write a note. There's a lot of notes because these are going to be, and in practice, obviously, a lot of tax returns will have a lot more accounts than these maybe. You know, you could have a, so I know a lot of the accounts we're looking at, we're going to go back and adjust because that's where we want to focus. But here I'm going to say that the wages, I got wages. We need the officer compensation because we're going to have to break that out separately. But I'm going to push forward right now and say that it's just the 1,100,000. So let's go over here and say, all right, wages, jump into that, and salaries and wages. Yeah, I'm going to say is the 1,100,000. So if I come back over here, does that populate as I expect? Yeah, that looks good. So we'll make that, so I'm making it yellow over here, and then I'll make it green over there. And then we have the depreciation, which is calculated at 20,000, which seems like a completely odd depreciation because if I go over here, it's calculated at the 297,330. So now I'm going to go, there's something, really wrong with the depreciation. And that might be a book adjustment that we'd have to look into. So we're going to, because that doesn't tie out to the book depreciation or the tax depreciation. So now what I'm going to do is I'm going to keep pushing forward. I'm going to say, maybe their financial statements aren't right in this case. We'll have to do an adjusting entry for the depreciation. So I'm going to go down here and say, depreciation may need book adjustment. Right, so we may need a book adjustment for the depreciation. So we'll have to, but right now I'm gonna push forward with it, and basically that means I'm gonna have to override the depreciation because I want to get to this income number first. So I'm going to say, all right, let's go back over here, go to the depreciation. That's going to be here. So I'm going to jump to it. Now, at this point in time, you may end up, I'm not going to go here. You may end up wanting to look into the book adjustment. If you have to do an adjusting entry to the books and not a tax entry, then you may want to go into the adjustments. But I'm gonna show you that adjustment next time. So we're gonna tie out first. So I'm gonna go down and I'm gonna say that depreciation is gonna be for the 20,000, 20,000. So I'm gonna force that to work so we can tie out. So there's the 20. And then I put that into the notes. All right. And then I'm going to go back over here and say, all right, this is yellow now. And this is green. All right. And then we've got the bad debt expense. And that's another one that we could have a difference between the bad debt expense on what could be written off for book purposes due to the allowance method for depreciation. So again, we might have to go back to this one. A lot of yellow accounts here. I'm going to say, all right, that one's something we might have an M1 adjustment on. And I'm going to put that into the notes and say, bad debt expense, do we need an M1 adjustment? Right? Something like that. And then I'm going to go back over and put that in the tax return as it is now. So here's bad debt. So I'm not going to go, asking supervisors or anything for this yet. I'm just going to keep pushing forward to what I can do and put my notes down. And that's going to be for the 20,000. So all this yellow doesn't stop us. See, it doesn't stop us from doing what we can do here. And it's part of the process anyways. Then we have the meals. Let's go to the meals over here. And the meals is one of those things that we know there's an M1. Typically, there's a change recently between, it used to be meals and entertainment. Now it's basically meals. But there's always a question as to the deductibility, or usually 50% of the meals is deductible. It's so common that the data input screen on most software will actually try to help you out and calculate it for you. However, again, that kind of messes us up. So in other words, if I go down and I find the meals data input screen, and I put the amount for meals, then the software is going to try to help me out here. I'm going to say, all right, let's put 4,000 and see what it does. If I go back over here, meals is in the other section. It cuts it down to 2,000 and it makes an M1 adjustment down here for meals. I don't want to do that yet because I don't want to deal with the M1s till later. So I'm just going to manually put it into the other down here, and then I'll deal with the M1s one thing at a time. Now you might think, hey, I understand the meals is pretty straightforward. I know that M1, but if you have a bunch of M1s that you kind of know and there's 5 of them in place and you're out of balance, then it's kind of difficult. So I'd like to do that. I'm going to do the M1s one at a time. So even meals, I'm going to say, no, I'm going to put it down here for now and just call it meals. And meals. And that's going to be for the 4,000. And then I'm going to put in the notes once again. A lot of notes here. We're going to say meals. Meals. Can't do it. Meals. And then we need to break out the M1 50% adjustment, something like that. Should be good enough for me to understand it. Again, these notes are just between you and I here. If we want to give them to someone else, we'd probably have to clean them up a bit. So we're going to go back over and say that we have the meals. That's been done. That'll show up on the tax return then, now at the 4,000. Going to go ahead and make that yellow on this side. And then I'm going to go ahead and make that green on this side. Next we're to the repairs and maintenance. That one's a straightforward one. I don't have to make that one yellow, which is nice because I'm tired of making things yellow. That's going to be the 10,000. So here we have it at the 10,000. Repairs and maintenance. If we go back over, and there we have it. Repairs and maintenance is up top at the 10,000. So we've got that one. Going to make that one green. So done with that one. Contributions, and so we would want to, basically check the deductibility of the contributions. So you may have a note for the contributions in some cases, but I'm going to put in the charitable contributions here. It's not going to be the same as for an S corporation where they would typically be like a Schedule K type of adjustment. So I'm going to go here and say that we have the current year. I'm going to call them cash contributions. And this is going to be 30, what was it? It was 17,000. So 17,000. And I'm going to say okay. And then I'm going to go back over and say, all right, contributions. Then we have the property taxes. So property taxes, I'm going to go back over and go to the property taxes, down to the tax area. And let's say that's going to be taxes here, real estate, 35,000, and then we have the other tax, which is right underneath it. State income tax, 50,000. Okay, so I'm going to take those two, say those are done. And then if I go back over, all right, then I'm on the janitorial service. So janitorial, scrolling back up, there is that. That's going to be for 12,000. So 12,000 there, 12,000. All right, we'll make that one. Then we have the interest. So interest expense, and that should be a normal business expense for interest. So I'm going to say that shouldn't be a problem. Let's go down and find the interest. So yeah. So we've got the interest here, and once again, that was for the 59. So I'm going to say 59,000. And make that green again. So we're going to make that green. And then we have the advertising. So advertising is going to be up top. And that's going to be for the 59,000 or 69,000. Note if I miskey something along the way, then we're going to have to double check this. So that could end up being a good, thing for us to go back and kind of double check. So if I mess anything up, I totally did it on purpose so that we can then reconcile. Professional services, usually called legal and professional in the system here. So legal and professional. That's coming out to 41,000. So 41,000. And I'll make that green. So we'll green that one up. And then we've got the pension benefit, which I'm going to call employee benefits. So I'm going to call that employee benefits in the data input screen, I believe. Here we have it. So we're going to say that's going to be for the 30,000. 30,000. Going to go back over and green that up. Green it up. All right. Then we have the office expense. So we're going to go back over and look for the office expense. So office expense. Scrolling down, looking for there it is. I knew where it was the whole time. 7,000. 7,000 for the office expense. Then we have the miscellaneous for the 31,000. Kind of a lot for miscellaneous, but that's what it is. You don't want to have a high miscellaneous account. It's kind of well, it seems like that is not good. But in any case, it's not too bad, right? But still. Typically, the high accounts, they could be kind of a flag. Maybe if you had a whole lot in office expense or a whole lot in supplies or a whole lot in miscellaneous, which is kind of uncategorized. And then we have the federal income tax. So now the federal income tax is actually, of course, what we're calculating here. Note that in practice, the generally accepted accounting principles generally require that you calculate the federal income tax and then take into consideration basically timing differences within the calculation. So that's going to be more of an accounting kind of process related to taxation. We may talk more about that calculation. It can be a bit complex, but here we're going to say that calculation has been done and we're going to do the data input for it. So we have that 260,000. Now we're going to have to make an adjustment for it. Therefore, at this point in time, I want to put it in place because I'd like to get my book number, this bottom line number, to tie out so we can get something that is in balance, and then we'll go back and adjust for it. So once again, I'm going to go back over here and I'm going to put this into the to this number down here. I'm going to say this is going to be the federal income tax, and that's going to be for the 260,000. So 260,000. I'm going to put that in our notes again. So federal income tax, we're going to have to account for in our notes. Federal income tax adjustment of some kind. And then, like I say, I'll fix the spelling just because you guys are watching this. Normally, I might just keep it like that. But in any case, and then I'd go back over here and I'd say that this one's going to be yellow. And so we're going to say that's yellow. And so now we've got that in place. So now let's see if we tie out here. Let's go then to the forms. And we're going to scroll back down and we have the income of the 14615. So over here, if we scroll down, we're at the 14615. So everything looks like it's put in place correctly here compared to this number. So if I go back over, this is calculated by taking everything from sales on down, income on down, credits minus the debits. So this is, look how easy it is to calculate the net income, right? If you use a format like this, and there's the net income, it's a credit balance, so it's a negative number, it's not a loss, it's a credit balance income, and that ties out. Now, if this didn't tie out, then you can go through each of these forms and you can basically check each section of it and tie that out to the tax return. You can go back to the tax return and tie out each section to each section on the Excel sheet. So now that we have this, we're going to say that's not the end number here. We've got all these notes. You know, it's still like I got a lot to do here, but I'm feeling pretty good. I've taken a step forward. I have something that's in balance, and I know what to do from this point forward, right? I know where I can fall back to if there's a problem. And then I can go and say, well, does this make my balance sheet correct? Because now I have the income statement tied out. If I go to the balance sheet still doesn't tie out. These two numbers are not the same, so it's not in balance. And so now I'm going to say, well, this it's not in balance. So what's wrong with it? It's got to be this number that's wrong because we figured everything else in the balance sheet, and this number is affected by the net income, which we just figured out, and it could be affected by dividends. So first of all, the difference between this number and this number is going to be this number here, the 1238 643. And if we go back over here, we had the 14. So those numbers are different because the 14 is down here on the tax side. We would think it would be up here. Why is it different? Because we had this giant M1 adjustment for the depreciation. So next time, what I'd like to do is basically be able to get the system to reconcile this. To do that, you're going to have to figure out two things. What are we going to do about this M1 adjustment? And then what about, are there any dividends that will be in place? If we take care of those two things, this balance sheet should be in balance. Once that's done, then we can take each of the M1 adjustments one at a time.